Hello students, welcome to CivicCentre IAS classes. In this class we will discuss about recently released RBI report, especially for the financial inclusion. That is nothing but your RBI Financial Inclusion Index. So first of all we need to understand about what is financial inclusion. Inclusion in financial services, irrespective of your gender, age, caste and your economic status. That's what we call it as a financial inclusion. Since from 2014 onwards, the government of India has come up with a numerous initiatives to encourage unserved and underserved population to have financial services. Let's suppose if you take Pradhan Mantri Jan Dhan Yojana, it is a classic example for your financial inclusion, where you will be provided basic savings banks account and at the same time overdraft facility. So these are some of the initiatives under which the government is actively promoting financial inclusion in this country, so that the gap between rich and poor, especially while accessing financial services, whether it should be credit facilities or basic bank accounts or loans, these should be available at a affordable cost. So that's what we are consider this as a financial inclusion. So if you look at RBI's financial inclusion, it was started August 17, 2021. So after COVID-19 years, the RBI has come up with these financial inclusion index, whether accessibility or usage and quality of these services were good or not. That's why this topic was very relevant. So if you look at RBI's financial inclusion index for this year, especially this will released every July. In every July, the Reserve Bank of India's FI index rose by 4.3% in financial year 2025. If you look at the graph, the RBI Financial Inclusion Index for March 2023, March 2024 and March 2025, it has gradually increased 60.1 to as of now 67. That's why this topic is very important. If you look at financial inclusion definition, it was started way back in 2021 and tracks the progress of ensuring access to financial services, timely credit and affordability of vulnerable groups. If you recall, inclusive growth according to OECD, affordability, accessibility, availability. In a similar way, the financial inclusion also progress the access to financial services, affordability of credit and availability of these credit to especially vulnerable groups. So it comprises three broad parameters. The first one is access with 35% weightage. It reflects how easily financial services are available. So if you look at new age bankings, especially payment banks or neo banks, these have created a ecosystem where each and everyone should have their banking accounts in a easy way from your convenient place by providing KYC details. So it will be tracked. Access. Next one, usage. Usage with 45% weightage. It indicates how frequently and effectively people are using these services. So if you look at private banks or public sector banks. Each and every bank is aligning with its different policies. Whether how frequently these people or businesses are using these services, that is the second category, 45%. Quality, next one is quality of the services provided by financial services providers, whether it should be banks or NBFCs or any other government entities. So how quality these products are? 20% weightage. It includes aspects like financial literacy, consumer protection and reduction in inequalities and service deficiencies. This will consider under third category. So if you look at the data, that is the data, and what is the importance of this financial inclusion in India? The first one is it supports entrepreneurship and business growth. If the banks are readily available for lending for the business and at the same time individuals, then obviously it will support entrepreneurship among the larger population, because India doesn't produce enough jobs for its population. And at the same time business growth, if the banks are providing enough liquidity to the business classes, then obviously they will either expand their businesses. Whenever the businesses are expanding, obviously we can expect employment growth. And at the same time we can expect reducing inequalities. That is also. Next one, sustainable development goals. From United Nations, there are 17 goals and 169 targets. These 17 goals especially were interdependent. So obviously, to progress in all 169, obviously you need a better financial resources. That is also one of the major importance. And it signals India's growing success in expanding financial access. If you take FDIs or any investments that were made in India from abroad, and at the same time if they want to expand their businesses in India, then obviously they will look for banks credit. If this bank's credit is easily available at affordable interest rates, then India's image will be very high in international arena. And what are the challenges of financial inclusion? There are still large gaps in high and low income countries as in account ownership. That is one of the major problem. Women, especially in developing countries, are less likely to have access to financial services. To some extent, this was completely not true, because if you look at UPI revolution, Bharat QR, Bharat bill payment systems and other financial initiatives that were definitely helping the women to achieve their financial inclusion goals. So to some extent it is correct, and at the same time there are some underprivileged and vulnerable sections of population because they don't have any financial literacy or digital literacy. Because of that reason they are from the out of this financial inclusion index. Inadequate digital infrastructure and low digital literacy hinder access to mobile financial services. This is also, to some extent, the statement is partially correct and partially incorrect. If you look at the digital infrastructure, these are obviously some of the digital infrastructure. Obviously, the government is expanding. Even UPI has become global now. You can send, you can remit money from anywhere in the world through UPI, but to only some countries as of now. And at the same time, financial literacy campaigns were carried out by RBI regularly for the financial literacy, and at the same time digital literacy for the vulnerable sections especially. So that is also one of the challenges. Weak consumer protection leaves user vulnerable for fraud, misuse and lack of transparency. Nothing but ombudsman scheme, especially from RBIs. If any issues arising from your banks, then obviously you can approach your concerned bank and you can expect it to be resolved by 30 days. If you are not satisfied with this resolution passed by banks or solution, then obviously you can approach central ombudsman scheme. If it has to be very prolonged, then obviously the people will lack the trust in these financial services. And at the same time, there is a problem of growing cyber menace. That is also one of the major issue, and lack of transparency in banking channels. That is also one of the major challenges. So, if you take a practice question, so these type of questions that we can expect from prelims point of view. Consider the following statements of RBI's Financial Inclusion Index. It includes both demand side and supply side data. It is published in collaboration with the Ministry of Finance. A score of 100 indicates full financial inclusion. Which of the above statements is or are correct? So if you look at a second statement clearly, it doesn't have any collaboration with Ministry of Finance. You can simply roll out this option. So if you remove 2, obviously the answer would be B. So let's understand this. First one, it includes both demand side and supply side. What is demand side? Demand side is nothing but from people and businesses. This is demand side dynamics. And supply side is nothing but how Government of India is providing these type of financial services. So if you take an example, Pradhan Mantri Jan Dhan Yojana, and at the same time Jam Trinity, Jan Dhan Aadhaar Mobile, for the benefits to be reached to the beneficiaries without any external medium. So this is from supply side. Supply side is nothing but your from Government of India side, and demand side, who are demanding here? Whether people or businesses, individuals or businesses. So it is correct. A score of 100 indicates financial inclusion. Actually, it was from 0 to 100. 100 means fully financial inclusion. 0, not financial inclusion, not included as a financially included. So that is also correct. 1 and 3. So answer would be B. So that is the discussion for Financial Inclusion Index recently released by RBI, and how the Government of India with its various initiatives has becoming more and more evident for the policy making decisions by leapfrogging more numbers into their index. And at the same time, what are the major issues especially? And at the same time, what are the major features of financial inclusion? Whether accessibility, quality, usage, these will be important for your prelims point of view. That is the discussion for today's daily economic series capsule. Thank you for watching class. Have a nice day. If you have any doubts regarding economics especially, you can mention it in comment box so that we can have a greater clarity in clearing your objects. Thank you.